Imagine waking up and seeing $5,000 hit your bank account months after month with absolute certainty. That is $60,000 every single year, backed by real IRS-verified strategies. But here's the impossible truth. Most people lose more than $30,000 before they even realize the opportunity exists. If you miss one step in this routine, your money could disappear faster than last night's paycheck, especially with new tax laws changing everything for 2026. Today, you're going to learn 4 proven moves that unlock hidden tax savings, build unstoppable monthly wealth, and put you in absolute control of every dollar you earn. Stay until the end because this routine includes up to 3 specific IRS deadlines for maximized savings. If you miss them, poof, thousands gone. Just like that. Let's get started with the 4 biggest payday moves. Here's your crash course in beating the system. Look, it's not just you. Nearly 9 out of 10 Americans admit they feel anxious by the second week of every month when their paycheck starts to shrink. You see the direct deposit, get excited, and within days the number drops and bills pile up. You deserve more than just surviving until next payday. This routine is designed to guarantee stability, end constant money stress, and actually let you enjoy life along the way. Now, here's a reality check. The cost of living in 2026 is higher than ever. Groceries, rent, tuition, even basic bills have exploded, while wage increases barely keep up. This is why you need a proven system built for modern financial challenges. Rhetorical question: does your entire paycheck vanish before you see the end of the month? If so, you're not alone. This video is your roadmap to reversing that pain step by step. Step 1 is the foundation. You secure your wealth by paying every critical bill up front. That means your rent or mortgage, utilities, transportation, insurance, and debt obligations. Miss a single bill, and you risk not just foreclosure or eviction, but 7 years of credit damage, IRS penalties up to 22%, and even an audit. Mortgage interest and the SALT cap, state and local tax deduction, only apply if your accounts are paid and records are perfect. Specific example, a homeowner paying a $400,000 mortgage gets $18,000 interest paid in year 1, triggering a $3,960 IRS tax deduction. Renters in high-tax states with $15,000 in deductible state and property tax can see $3,600 back instantly. Reality check: unpaid bills equals lost deductions. One slip and you pay hundreds more. Track every payment using spreadsheets or simple apps and file all receipts monthly. That is the first pillar to winning every payday. Step 2 is where the wealth multiplies. Investing for the future is not just smart, it's urgent. IRS just announced the 2026 401k limit, $24,500. Every dollar contributed pre-tax saves you up to $2,880 per year if you are in the 24% federal bracket. Over 30 years, these savings compound into a massive $847,000 additional retirement wealth. Stop. Let me repeat. $847,000 just from following a routine. Separate your investment accounts. One for retirement, one for brokerage. Automate transfers every payday. Delay even a single year, and you lose $30,000 plus to unnecessary taxes and lost compounding. Bonus, in high-tax states, every $23,500 you invest in a 401k might also save over $3,000 in state taxes. Whether you invest in stocks, index funds, IRAs, or real estate, split money between these buckets and use every legal deduction on the books. Step 3 is for defense. Save for specific goals and slash your biggest, nastiest debts. High-interest debt is the #1 silent wealth killer in America. Credit card rates are commonly 20% or more. Pay down debts ASAP because there are 0 tax deductions here, and unpaid balances can trigger IRS tax on forgiven debt. Example: $5,000 in forgiven credit card debt equals $1,100 extra owed to the IRS. Most people get blindsided by Form 1099-C. Emergency fund savings are essential. $25,000 at 4.5% earns $1,125 interest per year. Accept the tax drag because having that cash saves you from going further into debt. Dramatic pause: one category of spending, whether it's eating out or shopping, often wipes out your entire budget. Block it immediately once you spot it. Use savings for vacation, home down payment, or car, but always automate transfers monthly and audit your budget every quarter. Revise targets annually. For student loans, new rule: income-driven repayment forgiveness becomes taxable after January 1st, 2026. $50,000 forgiveness equals $12,000 tax bill. Step 4 is self-care with boundaries, guilt-free, smart spending. After paying bills, investing, and saving, you must allow room for personal enjoyment, but you must know the tax rules. Most entertainment, dining, hobbies, and shopping are not deductible. Only business meals and equipment have tax optimization potential. The 100% business meal deduction expires December 31st, so self-employed folks must front-load these expenses now. Equipment or work vehicle purchases, like a $40,000 truck, can unlock up to $50,000 in first-year deductions, saving $12,000 instantly. Reality check: missed deductions on fun expenses mean less wealth when you need it. Roll over extra fun money into your investment or debt payoff for next month. Use apps to document every personal and professional expense, then revisit this bucket monthly to maximize the joy per dollar. Remember, guilty pleasures are fine as long as you plan and track. Combine smart investing and fun moments with family, hobbies, or travel. Now let's get tactical. Here are the critical 2026 changes and mistakes to avoid so you never lose a dime. Number 1, SALT cap increased to $15,000, but the window closes after 2027. If you live in California, New York, New Jersey, Oregon, or any high-tax state, plan ahead yearly. Number 2, mortgage interest deduction cap reverts to $1 million for new homeowners after January 1st. Number 3, the 100% business meal deduction vanishes after December 31st. Front-load your planning ASAP. Number 4, student loan forgiveness for income-driven plans is now taxed. Lump sum payoff or public service route might save you thousands long-term. Number 5, Section 179 deduction for equipment and vehicles nearly doubled. Small businesses and freelancers now qualify for $2.5 million in deductions. Check eligibility before big purchases. Pause. Don't get caught by audit triggers, missed receipts, or commingled spending. Always keep separate accounts, document all business expenses, and automate record keeping with digital tools.
Let's hammer home the 5 money multipliers for 2026, your fast recap just before action time. Number 1, tax brackets expanded 3%, fit more income at lower rates. Number 2, standard deduction up to $29,200 for married couples. Number 3, SALT cap raised to $15,000, huge for high-tax states, up to $3,600 saved yearly. Number 4, 0% federal capital gains. Married couples can harvest up to $89,000 without the IRS touching it. Number 5, retirement max increased $24,500 for 401k, up to $2,880 annual savings per person. Use even 2 of these and you're thousands of dollars richer every single year. Here's your action plan. Don't wait, don't miss out. First, hit subscribe and punch the bell icon. New strategies each week keep your money winning. Second, empathetic, share this video now with anyone you care about in a high-tax state. You could literally save them thousands with this one routine. Third, comment below which strategy resonated with you. Are you maximizing investments, beating debt, or hunting for deductions? Remember, the SALT increase, business meal and equipment deductions, and student loan changes are all time sensitive. Don't leave thousands on the table. Your financial future is built today by every step you take. Thanks for watching. See you next payday. Wealth Builder.